Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A very interesting pattern here yesterday. A combined key reversal down and bearish engulfing pattern right at the top of the market. This comes after the previous session's indecisive spinning top, which in turn showed intraday indecision after the prior recent intraday indecision, all at the top of the recent market. As I said 2 days ago, to be honest, this intraday and now intraday contradictory markets at the highs is not what is needed if prices are to move higher to any degree. Hesitation up here is not welcome by the bulls, I'm sure. We are nevertheless still over the upper trend line, currently at 74.01 of what I had labelled a possible descending expanding wedge pattern, currently 74.01 to 67.96. Now, as you know, or should know by now, I haven't been entirely happy with this pattern since there's a heavy dose of the word possible in front of it. Even now. Well, for starters, it hasn't completed the requisite 5 touches combined of both trend lines. Yet, leaving that aside for the moment, as well as its short life and steep downward angle, leaving all those things aside, we still do have this pattern. This led to 3 diametrically opposed questions. 1. Is it a false break higher? 2. How high will the move be? And 3. Is there some other pattern being constructed that may usurp the superiority of this pattern? Okay, so for question 1, well, if it was a false break, then we should have known about it by now. For question 2, well, a primary target X will be in the 78.67 area, for secondary and much harder to reach target X1 in the 79.46 area. These are big asks of the market, especially from what is in truth a not too good looking descending expanding wedge pattern. Finally, 3. Is there another pattern? Well, possibly. I have an idea, but I'm not happy sharing it just yet, as I would like to see some more action. So what do we have above as resistances? Well, there's the congestion around the January 2020 high at 76.30, which capped the market earlier this week. Then there's the more recent highs at 76.35 and 76.39. Meanwhile, on the downside, around the broken upper trend line, we have the now separating rising short medium moving average, currently 74.77, and the medium moving average, currently 74.31. So far today, a small follow-on lower, with a lower open and a small move below yesterday's low. Looking below, we now have last week's low at 75.15 and the rising short medium moving average support. German DAX futures. A significant key reversal down yesterday. This is the traditionally appropriate response to the previous session's hanging man pattern. Prices broke down through the declining medium moving average, currently 14.398, and only halted at the 50% Fibonacci line for 2022 at 14.343 before closing just over the medium moving average. This brings to my mind my comments of yesterday when I spoke about these supports, where I said, and I quote, "If the market can break free of these, then there would seem to be some good upside potential. However, failing to break free eventually means a test lower and possibly a move further down to the maelstrom of support below, down between 13.804 and 14.079, end of quote. This is now the first steps the market has taken in moving back towards the proposed April to May descending expanding wedge pattern, currently at 12.564 to 13.943. However, for the moment, I will still keep the upside targets for this pattern. There is a primary target X in the 15.440 area and a secondary and harder to get target X1 in the 15.725 area. These are big asks. So far today, we're a lower open below the medium moving average and a move down through the 50% Fibonacci line, but halting and reverting back up to the 50% Fibonacci line upon meeting the rising short moving average of all things, currently 14.294. One final thing to consider. With today's move lower, we have the conditions set up for a possible weekly key reversal for this week. If we close tomorrow night either over 14.450 or under 14,444, then we'd be on. Right now we are looking at a weekly key reversal down. US E-mini S&P futures. A bearish double pattern yesterday with the markets rejecting the overhead resistances of the upper tine, currently at 41.55, of the January to March bearish Andrews pitchfork, as well as the middle tine, currently 41.71, of the bearish shift pitchfork for the same period. It was also a reasonable follow-on to the previous session's traditionally appropriate bearish hangman pattern. In theory, that made the hanging man a third countering pattern, and yesterday a fourth countering pattern. Looking below, we now have the interesting rising short moving average, currently at 40.92. This had recently supported and fed ammunition to recent rises. Overall, we are on day 3 of the danger period of something I've spoken about now for weeks. This is the crossover period of 2 tines of the previously mentioned January to March Andrews and shift pitchforks. I'd earlier highlighted the previous crossover of tines from these 2 patterns, 2 pitchforks I should say, on Thursday 3 weeks ago as a period where one could expect or one or more of the following: volatility, a change in trend, or a reinforcement of trend. This was an important time period, and I highlighted it with a red circle on my daily chart. I'd also drawn another red circle for the next crossover to come for these same pitchforks. This is of the upper tine of the bearish Andrews and the middle tine of the bearish shift pitchfork, and it is centered on the 7th of June. Hence, I renew my warnings and what to look for. Look for volatility, a change in trend, or a reinforcement of a trend. Other than these, further down we have the congestion band, 39.59 to 40.55, that tried to trap the recent market, so keep a keen eye for what may happen. So far today, well, a slightly higher open with a slightly lower low, but a move back up over the June 21 low, but not as far as the upper tine. And looking right now like, well, it depends on your count. It's either an immediate countering bullish harami or a 5th countering bullish harami. Whichever way you cut it, it's starting to get a bit extreme in its indecision. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Invest Services International Limited. And here comes the final bit.